Let's get back to Jonathan Barratt, who is Managing Director at Commodity Broking Services, joining us again live from Sydney. Jono, we were talking to one equities trader before who was saying he was a bit cautious heading into this Q2 GDP number coming out of the States. Are you just kicking around the sidelines today as well?
Look, we are. We do want to see what that number says. Indications are that it's perhaps not going to be as strong as what we feel. More important also, we're looking to see what's happening out of Europe. Remember, we've got some employment data out of there. And what we want to try and do is measure what's happening in the US, measure what's happening in Europe, and compare that to some of the comments and rhetoric and some of the price activity we've seen in Asia. Because I think Asia is about to have a little bit of a lift in terms of economic activity. And let's see if we can combine them two for a pretty rosy picture.
That's curious you say that, because we've been talking about, or looking at China PMI, when some fear that could be in contraction mode. How big a risk is that, and are you worried about the numbers?
Well, I am, and I've got to focus on it. But what we're seeing in the physical market, in particularly for coal and iron ore, we've seen a market that's been contracting for the last quarter. Prices for iron ore and coal have been off somewhere between 26 and 30% for the spot prices. And only this week we've seen an uptick in the pricing, up around about 5 to 7% for both of them. And that falls in line with some of the rhetoric we're hearing out of China. We've noticed that the CPI in China is relatively stable and low. So you can, I think, start to forecast that they're getting ready for another bit of a push. And that push comes from the use and import of those primary imports.
Jono, gold seems to have fallen out of favour recently, and I find that a little bit hard to reconcile with the global picture, because there's no shortage of risk still out there, there's no shortage of uncertainties. So what do you think gold has started to retreat? We've also seen
unusual uncertainties.
Yeah, unusual uncertainties, and we've also seen outflows from the big exchange-traded funds, especially the SPDR.
Yeah. Look. Yeah, have Cherie. Look, see, gold in itself, it has broken through some key levels. People are starting, particularly with the lift we've had in the equity markets, are starting to move out of gold and basically back into equities. And we've seen that trend over the last week, 2 weeks, particularly when we saw a breakthrough 1185 in gold, that we saw a massive return out of the SPDR. To bring that into perspective, last night or the night before, we had 18 tonnes of investors move out of the SPDR. Now that equates to something like 578,000 tonnes of unexpected gold going onto the market. So if we just get a reweighting, remember that the ETFs cover close to 3,600 tonnes. And if you have a reweighting in investor sentiment just by 10%, that will equate to 1.1 million ounces coming onto the market. So it is an interesting period at the time.
Okay.
Period of time, yeah.
Listen, God, look at those gold bars. Yeah. Okay, listen, John, gotta go. Great to talk to you, sir. Good weekend. Enjoy yourself. See you again soon.
You were mesmerised then, weren't you, by those gold bars?
Yeah, let's look at those pictures again. I mean, if we have time. Gold bars, I mean...
You're sitting here with your mouth open going, look
no,
at this.
I mean, the thing that struck me was, oh my God, what if you drop one of those?
Yeah.
I mean, it's
that's why those guys
right?
probably wear steel toe-capped boots.
They are actually. Look at that. They do have steel capped on. Look, they do.
No, what happened to the gold bars? Anyway, look, we'll talk.